Guys, hope inflation hasn't affected your portfolios that much. For me, well, quite some, and hope everything will get normal and better from time to time. In this case, I want to especially talk about inflation because it has been affecting almost the whole stock market. Um, well, the idea is to have a better understanding and trying to update your positions to battle and to get always the most out of the market, and we can have our financial freedom. Um, so yes, definitely the inflation got everyone by surprise almost, because the fundamentals of a stock price, which is pretty important to understand, are due to the earnings and the earnings growth of a company, and the multiple of the PE ratios, which is price over earnings ratio. And yes, if you think that your company where you invest or you buy stocks are gonna have very strong earnings because of X or Y plan or X or Y opening in additional international markets. So yes, that will be a good option, and the price could grow in the future. And the PE ratios is a very common index which describes almost the same, but taking into account the multiple, it's due to the discount of those future earnings. As we can see in this graph, the earnings growth projected or forecast for future periods will be discounted by a rate, and that rate generally is inflation. So the lower the rate of discount, the higher the price of the stock market, of the stock in the stock market will be. But if the inflation is higher, so the higher will be the discount of the future earnings. Then the lower will be the actual stock price. That's the main reason why inflation make this value reset, as for example Cathy Wood just mentioned in the last week. So from time to time it's healthy to see some pullbacks, because such high growth in the market is quite unsustainable. That steep was so this line was so steep that it's not so unsustainable, and hopefully uh, many investors and many retail investors as us um, have materialized very good gains that from those last weeks we have been diminished a little bit for some who didn't close positions. Hopefully, I closed like 20% of my portfolio around this point, so I could save myself from this almost 6% down negative percent. So well, hope we continue with the explanation and update our positions. This is my actual portfolio, TQQ, which represents the tech sector of the Standard & Poor's. I think it's important to focus in the bottom line. The bottom line will be to focus on real earnings and not in future or possible earnings. Because of this explanation of the discount rate of the future earnings, and also if we don't have earnings yet, and most of the companies, if actually are not making money, they are projecting to make some money. But it's very critical in these scenarios with higher inflation to do not generate earnings. So it will be good if we focus on earnings, and especially, as I wrote here, dividend stocks, dividends such as AT&T, Coca-Cola, Disney, etc. Also, tech stocks have been known as growth stocks, but actually there are, for example, this group, the fund, which is Facebook, Amazon, Netflix, Apple, Google. Those companies are tech definitely, but they are making a ton of earnings, and also are projecting higher returns and higher earnings. So it's a good mix between growth and value, and very good and strong earnings. So this will be a position to increase in at least my portfolio, hopefully around 15%. And FNGU is the ticker symbol for the leveraged ETF. So it's a bit more risky because of higher fluctuations daily, but it's a good option for you to know. And the ticker symbol, which is not leveraged, is FNGS. I will write in here. We can see the drop for FNGS has been almost 7%, and if you compare with FNGU, will be much greater, around minus 20%. But I bought this position around those points, almost $34, and hopefully, as we can see, the drop is so high. The same will be with the recovery, 20% or even more. It depends on your goals. If your goals are for mid-term, short-term, the longer term, the better for you. We are talking just about 30% to get in, to reach the highest high we got just weeks ago. And that will be FNGU. Repeating the same analysis with FNGS, we will get 7%, which is not bad. And it depends on your risk aversion. So yes, TQQ is the leveraged ticker symbol of triple Q, and it will be like the same. I'm buying this leveraged ETF just in these cases, around those higher levels, I tend to sell them because of their because of, well, we are seeing highest highs